Well, my next guest says the key thing to watch is how many trades were involved. Alastair McCaig is a trader at World Spreads. He joins us now. So, I mean, tell us your thoughts, your reaction, and the sort of questions that you are asking about this trading loss.
Morning. Well, I think there's two key areas of damage that potentially will be happening to UBS here. You've obviously got the market capitalization and the effects on the profitability of the company, but you've also got reputational damage. And the extent to both of these will be dictated by how many trades this was. If this was a one-off trade that was an error, a mistake, then in fairness, mistakes do happen. It will call into question the speed with which they pointed out and noted how quickly this error was placed and how quickly they dealt with it. But if it was a sequence of trades, then it really calls into question, A, the ability of one trader to manipulate the internal systems that they have, and B, the fear that there may well be others out there doing the exact same thing.
And are you then also thinking about the period of time that these trades would have taken place? If it is indeed more than one trade, the period of time that this was all within, and also that the actual products that these trades took place within, how much is that going to influence reaction, if you like?
Very much so. Look, we've seen a huge amount of volatility in the markets, in the equity markets, in the commodity markets. When you bear in mind UBS is obviously based in Zurich, and Swiss franc will play a large part in it. The fact that the Swiss National Bank, relatively out of the blue, pegged their currency to the euro, maybe that might have something to do with it. But I think that the key question really is how many trades this is. If it's a one-off trade, a 2 billion loss on a one-off trade is a pretty big loss, and then it calls into question the speed with which the compliance, the overseeing committee spotted this error and how quickly they dealt with it.
So what other risks does this highlight then for you?
Well, the other area, of course, is the reputational risk to UBS. Back in 2008, they obviously suffered greatly on the back of the toxic debt issues. They, along with RBS, were one of the two largest sufferers in the marketplace. They lost a lot of clients on the back of that, and they've spent the best part of the last 2-3 years effectively clawing back their percentage of the market. This will do them no good whatsoever. It'll damage their reputation again, and it calls into question how they will perform going forwards, how much faith potential clients might have going into UBS if they can allow this sort of thing to happen.
Yes, exactly, because we're getting already analysts' reports from the likes of Bank of America, Merrill Lynch and Goldman Sachs that compensation to employees will be affected, and that also dividend payouts could be potentially impacted as well going forward. So what does this mean? What are the implications for the bank, given that many were saying their investment banking division was already struggling?
Well, it really depends exactly how their sort of bonus pools and payment structures were based. But if it's departmental rather than individual, then obviously the rest of his team, their team, whomever it might be, will potentially suffer on the back of that. They'll potentially look at the problems that UBS will have going forwards with their reputation damaged, and they'll potentially be looking at other firms to migrate to. It won't just necessarily be the clients who might look to move. It may well be some of their own traders who were completely error-free in this, but potentially will suffer.
OK, well, thanks very much indeed for joining us. Great to talk to you.
Thank you.
Appreciate your time.